So let me just very quickly tell you a little bit about Nexus. So there are about 65 and growing number of fast payment systems in the world, but they only work in the domestic space. You can't do a cross-border, cross-currency transaction in the fast payment systems. Now, in Asia, where we heard before, a lot of things is happening very quickly. Some bilateral corridors, so making fast payments, cross-border, cross-currency available, is already there. But if you scale this up to all 60 plus and growing fast payment system in the world, you will get a maze of almost 2,000 bilateral connections. So the Project Nexus is the answer to this problem. And we already have countries in Asia that is very committed in building this. And we hope to see other countries joining in the next couple of years to follow, so we can get this going.
In order, I think, to get your audience up to speed on what Velo Labs is doing, I think it's best to maybe just like talk about what is remittance, why do we need a remittance solution in Southeast Asia? I mean, generally the way things work now. So what's happening now is that, Southeast Asia has a lot of different small little countries like Thailand, Cambodia, Laos, Myanmar. There's a lot of migrants going back and forth between these countries. A lot come into Thailand, for example, and they need to send money back home. And they're not banked. They don't have access to banking. They work through small agents. And what happens is it's a very informal process, and they end up paying a lot in fees. It takes a long time for their money to get home. By the time it gets home, their families get some percentage, like 90%, 85% of what they made, what they sent. And so it's a significant problem. You have millions of workers who have to, deal with this situation. So the current remittance infrastructure, has basically 5 parts. So one, you have the capture, which is essentially money being handed to the agent, messaging, settlement, liquidity, and disbursement. Now, capture and disbursement, it's basically money being handed to the agent is capture, right? And money being handed out to the immigrant worker's family is disbursement. Everyone understands that. Even in traditional remittance from, like, say, US to Thailand, you go into either an agent, it might be MoneyGram or Western Union, you give them money. That's the capture part of it. And the disbursements on this other end where, the agent for MoneyGram will give the money to the recipient. So what's happening between is what's actually more complicated. And that's where Velo Labs is trying to, create a solution, because you can only do so much at the capture and the disbursement stage, because it is kind of instantaneous. You hand out money, you receive money. But what's happening between is there's many steps, and there's a lot of delays, there's a lot of fees. And so that's what we at Velo Labs are trying to solve using the blockchain. So let me just talk through those middle steps: messaging, settlement, and liquidity, so your viewers can understand, generally what is the current process. So messaging, now that's like basically sending how much money, who's sending the money, maybe some KYC on the actual sender, and also who it's being sent to, right? And so that messaging layer is where, some of the current solutions, like, say, Ripple or Swift, that's where they come into play. Also settlement, right? Settlement layer is all the intermediate steps of moving that money. So you have essentially someone sending money from Cambodia, or say Thailand to Cambodia, for example, right? And they will send that money. It goes sometimes back to the US, converts to dollars, converts from dollars into the local Cambodian currency, and it comes back, and it takes 3 days. There's multiple.
Wow.
Yeah, there's maybe 3 or 4 steps, and each one's taking a fee out of that. So you send $100, step 1, you have $95 left. Step 2, you have $90 left. And it's by the time it gets to the family, it's like $80 is left of that.
Right. Because the middlemen aren't taking as much. You're removing like 4 layers of middlemen. So now that's directly passing the savings on to consumer. So, okay, on that front, roughly how many MTOs are involved? Like, how big is the network right now that you're saying you're trying to implement and trying to get connected to?
So, I mean, in Southeast Asia, there's we have some like sister companies and partners that are already building out the MTO network at the village level, right? In Cambodia, in Indonesia, in Thailand. And so we're talking about hundreds and hundreds of agents, like thousands of agents and hundreds of MTOs, like all throughout Southeast Asia, that aren't part of a traditional network, like say MoneyGram or Western Union. They're actually new in terms of being connected into this kind of global tapestry.
Got it. So it's all about using blockchain to solve an existing problem, to cut out multiple layers of middlemen that were existing prior to this and make these currency transactions easier. Now, obviously, with the blockchain, this is not something that's absolutely new. We've been able to send cryptocurrencies around. What makes Velo special in this case?
So, I mean, there's various solutions. Like I said, there's messaging solutions, right? Like Ripple is a messaging solution. You have, very stable coins that you can, like some people use to transmit, but there's no one solution. The issue with all of these, especially in a situation where like you're dealing with a small MTO, is like there's an issue of trust, right? When you send something, do you necessarily know it's going to be able to be cashed out on the other end in fiat if they need it? So what we're trying to do is build a system that has the messaging, settlement, and liquidity all together. It's kind of, we're trying to build like a trustless system in that the digital credit itself is tied to value of Velo token. So in a situation where there isn't settlement, where the digital credit cannot be exchanged for the fiat, then the Velo token comes into play. It has value, and it will basically be a collateral to that entire transaction. But it's done in a smart contract. It's done in a trustless way.
Got it. So when it comes to the token, so now you touched a bit about the token. So the token, one of the use cases is for collateral. Do you expect everyone to hold this token, or how does this whole token ecosystem work?
So like, for example, like we'll have a aggregator, a trusted partner who signs up with Velo, right? And so these trusted partners will use the Velo token when they want to create digital credits to use in their business. They will do that by taking Velo token and locking it in a smart contract. And this smart contract is tied to the fiat deposit and is tied to the digital credit. So, normally if there's proper settlement and the trusted partners are settling things on all the ends and end of day settlement, everything's fine, the Velo token doesn't really come into play. It's just there as a backing. Now, in the case where the settlement fails, then the party will receive automatically Velo tokens, which are the equivalent value of the send, right? And so that's when they will be able to hold the Velo tokens and exchange that back for fiat. But it's that collateral that basically is backing everything. So you don't have to trust, the receiver. You don't have to trust any particular party. Everything is tied to this value.
So it's almost like a decentralized finance application. You're using kind of your own kind of Velo token as your collateral, and then you're making sure that this all works. And if it doesn't work, the collateral can come out into play, and it'll provide trust for everyone there.
Yeah. So I mean, ideally, in a situation, you don't need to use it as collateral, but it's there as kind of a backup.
Got it. Okay, so we talked a little bit about this. Now, when it comes to the crypto side of everything, how do you ensure, obviously you can expect a huge number of transactions per second, because now this is a real life use case. I don't expect one or two people, you expect thousands or if not hundreds of thousands of people sending money each day. How are you going to handle that amount of transactions?
So we're going to use Stellar blockchain as is what Velo token is issued on. Stellar is able to do thousands of transactions per second. And then on top of that, our developers are coming up with a second layer solution to aggregate some of these transactions and, much like the Lightning Network, but we're doing that also for Velo as well.
Got it. So, okay, so now this whole system's coming in play. So it's a high performance network. You have your own Velo token. Now, in terms of the Velo token itself, so what differentiates this token from, say, a stable coin? We've seen a bunch of things like US dollar, etc. Where does that come in? How is this different?
Yeah, so like as I mentioned before, there's different layers: messaging, settlement, liquidity. What we're trying to do is make Velo token flexible enough and regulatory compliant enough to be able to do all of those, not just be a part of that chain. So instead of just like doing messaging or just doing the liquidity portion, Velo and the system will do all of them. And so, as I mentioned before, Velo signs up MTOs and trusted partners, right? And so at that stage, we do a great deal of KYC and AML. We want to be regulatory compliant. See, a lot of these stable coins, a lot of the cryptos, unfortunately, just the nature of their business is like they cannot have they cannot collect that information, and they cannot. That's why they run into problems with regulation. When you're moving money around as much as we would like in, I think, the blockchain space and the crypto world to be truly decentralized, to be anonymous, you're not going to get the approval. You're not going to be able to get the adoption for this unless you do it through the regulatory authorities. And so that's the angle we're taking, is that we understand, I think, philosophically, like what, blockchain, decentralized finance is really about. But in reality, if you want adoption, and if you want people to actually use it in the real case and really become comfortable with this sort of asset class and this sort of way of moving money, you really need to do you have to jump to the regulatory hurdles in the beginning. And so we're at Velo Labs is trying to do that by taking these trusted partners and doing the checks. And then once they're in the system, then they can just freely move these credits around and everything is regulatory compliant.
Right. And you talked a lot about regulation, and obviously in Southeast Asia, it's all about who you know. It's all about connections as well. So how do you plan to achieve this? What advantages do you have over everyone else when it comes to getting connections and more regulation clearance?
Right. I mean, so like that's one of the main selling points, the strength of Velo Labs is we've partnered with sister companies, and a lot of them we have like joint investors with some major conglomerates in Asia. Who are connected, in all of Southeast Asia and other parts of Asia as well. One of the main founders is a family member of the CP Group family, huge aggregate business all over Asia. I mean, in $50-60 billion worth of trade every single year. They're huge, and so you still have to do the proper application, the regulatory approval, but at least we have a sense of what the landscape is like. And we have in each of these countries, we have connections that will, help basically give us a heads up on what regulations are coming down the pipe, and so we can be compliant.